So you got $100, maybe it's from a tax refund or just what's left over at the end of the month. What if I told you that $100 is literally all you need to start building real wealth? Seriously, we're about to break down a step-by-step blueprint to turn that $100 into your very first investment in the stock market.
Now, I know exactly what you're thinking. You look at a stock like Amazon or Apple, and you see these huge price tags, hundreds of dollars for just one share, and you're thinking, come on, what's my tiny $100 really going to do? That's a totally fair question, and it's probably the #1 reason people just don't start.
Well, the answer is a huge, resounding yes, you absolutely can. In fact, right now is probably the best time in all of history to be a small, everyday investor. The old rules are gone, the barriers have been torn down, and we're going to show you the exact game plan to make it happen.
And let's be real for a second. Most of the investing advice out there for beginners is just not good. It's either super vague like, oh, just buy an index fund, whatever that means, or it's some crazy complicated spreadsheet that feels like you're back in algebra class. We're skipping all that noise and getting right to what actually works.
So here's our game plan. We're going to cover exactly why you can start with just $100, talk about the new rules of investing, and then help you choose your first simple investment. After that, I'm going to show you 3 different portfolios you could build today with $100. We'll even cover a cool advanced strategy and then wrap it all up with your own personal action plan.
So how on earth is this possible? How did we get here? Well, it all comes down to a massive shift in how the investing world works. And it's all thanks to technology that has completely leveled the playing field for regular people like us.
The single biggest game changer is something called fractional shares. And this pizza analogy, it's perfect. Think about it. If a whole pizza costs $500, you used to have to buy the whole pie or nothing. Now, you can walk in with $100 and buy 1/5 of that pizza. It's the same with stocks. You own a real piece of the company, and your investment goes up or down by the same percentage. It means no stock is ever too expensive for you to own.
And this is why everything is different now. First, most of the big investing platforms have no account minimums. 0. You can start with $5 if you want. Second, you can buy slices of the biggest companies in the world. And the best part? You're not getting eaten alive by fees because zero commission trading is now the industry standard. It's a whole new world.
Okay, so you're ready to go. But what do you actually buy? Instead of getting lost trying to find the next big thing, we're going to start with a super simple, really powerful, and diversified approach that is just perfect for anyone starting out.
Let me introduce you to the Exchange Traded Fund, or ETF. Just think of an ETF like a playlist. Instead of trying to pick every single hit song yourself, you just buy a pre-made greatest hits of the 80s collection. One purchase and you get everything. By buying just one share of an ETF, you instantly own tiny pieces of hundreds of different companies. It's instant diversification, spreading your risk without having to become a stock-picking genius overnight.
Now let's put ETFs head-to-head with their older cousin, the mutual fund. You can see ETFs trade like regular stocks all day long. They're usually more tax efficient. But here's the kicker for us, the minimum investment. A lot of mutual funds will tell you you can't even get in the door without $1,000 or more. With an ETF, you can start with just the price of one share. It's a no-brainer for beginners.
All right, enough theory. Let's make this real. I want you to see what your $100 could actually buy right now. So here are 3 different example portfolios, each one designed for a different comfort level with risk.
First up, we've got the conservative portfolio. You could call this the sleep well at night option. The goal here is stability. We're splitting our $100 between 3 absolute giants, companies known for paying out steady income. I mean, think about it. People need Johnson & Johnson's health products, P&G's household goods, and Verizon's phone service no matter what the economy is doing. These aren't going to double overnight, but they're built to be incredibly stable.
Next, the balanced portfolio. Honestly, this is a fantastic starting point for most people. You put half your money, $50, into a great dividend ETF like SCHD. Boom, instant diversification. Then you add $30 of a tech giant like Microsoft for that growth potential, and $20 of a rock-solid brand like Coca-Cola for stability. It's just a great mix of safety and growth.
And for those of you who are comfortable with a little more risk in hopes of getting a bigger reward down the line, there's the growth portfolio. Here, we're all in on 3 of the biggest innovators on the planet. The idea with these companies is that they're reinvesting all their profits back into the business to grow even bigger, not paying out big chunks of cash as dividends. This is a pure bet on long-term growth. Okay, now for a quick pro tip. This is not something you have to worry about on day one, not at all. But as you get more comfortable and your account grows, this is a really powerful tool to keep in your back pocket for the future.
It's called tax loss harvesting,
And I know, it sounds super complicated, but the idea is actually pretty simple. It's about finding the silver lining when the market takes a dip. You strategically sell an investment that's lost money, and you use that loss to cancel out the taxes you'd have to pay on your other investments that went up.
Here's how it works in 3 simple steps. First, you sell that stock or ETF that's down in value to harvest the loss. Second, you use that paper loss to lower your tax bill on your gains, or even on up to $3,000 of your regular income. And third, and this is key, you immediately reinvest that money into a similar fund so you don't miss out when the market bounces back. It's a really smart way to turn a negative into a positive.
So we have covered a ton of ground here, from the how to the what. But I'm going to tell you a secret. The most important part of investing isn't knowing everything. It's just getting started. It's time to turn all this knowledge into confident action. This quote right here, it gets to the absolute heart of everything. Your single greatest advantage as an investor isn't picking the perfect stock. It's time. The magic of compound growth, where your money starts making its own money, that magic needs time to work. And that's why starting now, even with $100, is so much more powerful than waiting 5 years to start with 1,000.
So here it is, your simple 4-step action plan. Number 1, pick a brokerage with no account minimums. And hey, when you do, maybe look into a tax-advantaged account like a Roth IRA. 2, fund it with your first $100. 3, choose an approach. Maybe just start with one single ETF. Keep it simple. And 4, and this might be the most important, set up a small, automatic investment. Even $25 a month builds the habit and puts that powerful compounding effect on your side.
Every single successful investor you've ever heard of, even guys like Warren Buffett, they all started exactly where you are right now, with a choice, with a first step. You have the blueprint. The only question left is, what will your first step be?